I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity Club by Ahmed Shawi. Today is Sunday, the 5th of May 2024. I'll be doing the weekly market review. So let's get started. Starting with the XY, here we have the weekly time frame chart. You can see how price traded down, filled some of the fair value gap, filled the fair value gap completely, and you can see the body is kind of respecting the fair value gap low, which is this candle's high. You can see turtle stop here. Price took the lows, stop trade on the sell side liquidity, and then rallied up higher. We have this fair value gap, price filled the fair value gap, and it reached to the weekly inversion fair value gap, which is this candle's low, this candle's high, reached roughly to the constant encroachment, and then from here I'm expecting price to run for this buy and this buy side liquidity. Go to the daily time frame chart, you can see how price this would be considered as a consolidation. This is a range between this candle's high, this candle's low. Price took the range low, traded to the fair value gap and to the bullish order block here on the higher time frame. So this would be a bullish order block and the fair value gap. So price traded to the daily fair value gap, weekly fair value gap, filled it, and weekly inversion fair value gap. So it has pretty much traded to a lot of PD arrays, a lot of important levels in the chart after it has taken the low of that range. So now what we will be expecting, this is accumulation, manipulation into a higher time frame PD arrays, and then distribution to the upside attacking these highs. And then you could be getting a measurement from this low to this high. You could be dividing it, or you could be projecting it to the upside from this low to this high, projecting it from this high to the upside. You'll be getting an idea of, or you'll be getting an idea of where price is potentially can reach for in the future. So we're looking for high prices, and that level actually, if you measure from this low to this high, it would be just above this high. So accumulation, manipulation, the lows, distribution to the upside. So think of this as a candle by itself. This whole thing is just like a candle. So the market, the candle opened, it traded down lower. This is the candle trading down lower. So this is the low. So from, let's say this is the opening, this is the opening of the candle, this is the low. So between the opening and the low, this is where you want to buy. This is where you want to be a buyer. And then we will trade up higher and create the close and the high and the close. So this is what I'm expecting. I'm expecting the higher prices here after we've been trading here. I'm expecting higher prices to attack the buy side liquidity. So this is going to be pretty much it for DXY. Going to ES here, I'm viewing the weekly time frame chart. I'm also viewing the continuous contract. As you can see, price has filled the fair value gap that I've mentioned last week, and we're potentially seeing price, or we're potentially expecting price to trade down lower after there. You can see we took the candles high, now expecting price to take the candles low and the sell side liquidity. Just below the sell side liquidity, we have a fair value gap between this candles high and this candles low, and we have the bullish order block. I'm choosing the high of that order block of that candle because there's a fair value gap. Going to the daily time frame chart, you can see how price formed a high, took out the high, and reached to the bearish order block right there. You can go to your chart and you can check it out. Price reached to the bearish order block, and then from here we can be expecting price to trade down lower towards the sell side liquidity right there. And just below it we have this low, fair value gap, and these lows in general. So this is gonna be pretty much it for ES. Going to NQ here, I'm viewing the weekly time frame chart. I'm also viewing the continuous contract. Price on the weekly time frame chart, it has completely filled the fair value gap between this candle's low, this candle's high, as you can see. Now we're expecting price from here to trade down lower to attack these relative equal lows, and just below these lows we have these lows. Going to the daily time frame chart, you can see the same thing here. A high that was formed just below the fair value gap. Last week, price on Friday, which was NFP, price traded up higher, touched the fair value gap, roughly to the consequent encouragement of the fair value gap, and now we potentially can expect price to trade down lower towards these lows right there. Just below these lows, we have this favorite gap, and below this favorite gap, we have this low. So these are the next strong liquidity that I'm looking for NQ. So that's gonna be pretty much it for NQ. Going to Dow, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see how price just run one more time for the favorite gap to make sure that it filled it completely. And now we can expect price to trade down lower to attack the sell side liquidity. Going to the chart, you can see price from the high just below the bearish order block. It traded down lower, making sure that everyone here thinks that we're gonna be looking for lower prices after we broke this low, and then it broke up higher. A lot of people are gonna be looking at this as a bearish market, a bullish breaker, or this is a market structure shift where like we've took out the low and we shifted to the upside. But I don't see it. I don't see this as a bullish breaker, or I don't see this as a market structure shift to the upside. I'm looking at this as a turtle soup, and then we'll be pretty much wrecking everyone who's trying to go long here, and we'll be attacking the lows. So my high time frame is bearish. I'm looking for lower prices. So any market structure shift to the upside is just rejecting the highs, and later on we'll be breaking the lows. So this is a range. We attack the highs, as you can see, and then we'll be attacking the lows. So that's gonna be pretty much it for Dow. Going to EURUSD, also known as the fiber, here I'm viewing the weekly time frame chart. You can see how price is just running one more time to the bearish order block right there. We're still aiming at the sell side liquidity and the sell side liquidity. Going to the daily time frame chart, you can see how price formed the high just below the fair value gap. That last week price traded up higher, reached to the fair value gap and to the bearish order block. From here, we can see and expect price to start trading down lower. Also, if you can plot Fibonacci from this high to this low, you see pretty much that we are at the OTE area, which ICT introduces in his teachings. I'm not going to go into the teachings of what is OTE. You can go to his channel and you can study about OTE yourself. But regardless, we've traded to the bearish order block. From here, I'm expecting price. A lot of people are going to be looking at this as a market structure shift to the upside. I don't see it as a market structure shift. I'm seeing this as a run on buy stops, and then we'll be attacking the lows. So that's going to be pretty much it for EU, or also known as the fiber. Going to pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see how price is filled the favorable one more time, as it's shooting to the bearish order block right there. From there, I'll be expecting price to trade down lower. So we have this candle. We took out the high of that candle, and then we're potentially seeing price attack the low. So I'm expecting price to attack the low, and this sets a liquidity right there. Going to the daily time frame chart, you can see price from the high, took out the high, reached to the bearish order block, and filled some of that fair value gap. It didn't fill it completely, but it filled some of that fair value gap and reached to the bearish order block. From here, I'm expecting price to trade down lower. You can see here the low resistance liquidity run. This is going to be a very low resistance liquidity run into these lows, and eventually this low. So I'll be expecting some kind of, this is a high, turtle soup the high, which is rejecting the high, as you can see. This is a very long wick on the upside. This is indicating for me that we're likely going to be seeing lower prices. So we attacked the highs, we rejected the highs, as you can see, and now we're going to be breaking the lows and this low. So my this is my going to be where I'll be taking partials, and my terminus will be this low. I'll be leaving a runner to see if price wants to reach for this sell side liquidity. This is how to stay in sync with what the market is doing on the lower time frame, daily time frame chart. Also, you can go to the hourly or the 4-hour time frame chart, and you can get more refined entry on that time frame. So that's gonna be pretty much it for pound USD, or also known as the cable. Going to gold. Here I'm viewing the weekly time frame chart. You can see you have a buy side liquidity here. Price traded to the fair value gap. It attacked one more time the low and reached the constant engagement, roughly the constant engagement of the fair value gap. From here, price can actually trade down lower towards this bullish order block, or it can just run up higher for the buy side liquidity. So that's gonna be pretty much it for gold. Going to crude oil, I'm viewing the continuous, viewing the weekly time frame chart. You can see how price reached the volume balance, was very close, and it reached to the rejection block. It was very close from reaching to the buy side liquidity, but it didn't reach to the buy side liquidity. We have retraced to the bullish order block. From here, I'm expecting price to reverse and start trading up higher to attack this buy side liquidity, this buy side liquidity and the major buy side liquidity. This by itself can just fail and start trading down lower to attack the lows. But this is what I'm favoring here. I'm telling you that I'm looking for I'm looking for higher prices on crude oil. So that's gonna be pretty much it for crude oil. Going to Bitcoin. Here I'm viewing the monthly time frame chart. As you can see, after we attacked the major buy side liquidity right there was a fair value gap. Price formed a low just at above the fair value gap. This month, it has traded down lower, took out the lows here, and traded into the fair value gap. From here, we can see price run one more time for the buy side liquidity, or it can just retrace down lower towards this fair value gap, this fair value gap, or this bullish order block. So it's still in a buy program. We didn't see any signs of reversal to the downside. So that's gonna be pretty much it for Bitcoin. And this is going to be pretty much it for the weekly review. Next week we have some of the high impact news driver, but they are not really important as the CPI, FOMC, and NFP. So we don't have any FOMC, we don't have any NFP or CPI next week. The high impact news drivers, which are going to be injected next week, are mainly going to be used, and you can be trading them because they're not as volatile as the other news drivers such as the NFP, FOMC, and CPI. So that's gonna be pretty much it for this weekly review. I really hope you found something insightful. Until I talk to you next time, be safe. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.